Traders War Room, we locked and loaded.
What's up, team? Chuck with Traders War Room. I got a fantastic video for you. It's our tech video. We're going to go off the Wyckoff trading method, give you guys a little, different type of strategy. We're trying to explore and grow not just portfolios, but also the mind as well. Also, if you like that beat that Traders War Room has in the background, listen, that's Young Keith. Check his info out in the description. And while you're in that description, we got all the hyperlinks to everything Traders War Room has to offer, all the products and services. All I got to tell you guys is to quit wasting that money that's not making money. Come join the team, come trade with the bulls, and as always, if you're ready, follow me and let's go to war. Let's get it. Note, this is going to be done in a multiple part series. There's just too much to cover, so today is part one.
You bring the drinks and I'll bring ice. Defeat's nice in the Traders War Room. What you want to do in the Traders War Room? What you want to do? This the Traders War Room. Traders War Room. This the Traders War Room. What you want to do? Hey, locked and loaded.
If you didn't get the hint, guys, we're absolutely killing the market. So come and get some, join the team, come trade with me. You get all access, everything we offer at Traders War Room. Go to traderswarroom.com/Discord, or you can hit up the instant message alerts.
China, Spartan Lee, in the Traders War Room. Hey, Traders War Room. What you want to do in the Traders War Room? Hey!
So let's start off with, who is this guy Wyckoff, right? Well, he was an early 20th century pioneer in the technical approach to studying the stock market, technical analysis. He's considered one of the 5 titans of technical analysis, along with Dow, Gann, Elliott, and Merrill. He was an avid student of the markets, and he was an active tape reader and trader. He also observed the market activities and campaigns of legendary stock operators of his time. This include J.P. Morgan and Jesse Livermore. From his observation and interview with those big-time traders, Wyckoff codified the best practices of Livermore into laws and principles and techniques, creating trading methodology, money management, and mental discipline. Basically, all the shiz that TA traders like you and I need. From his position, Wyckoff observed numerous retail investors being repeatedly fleeced. Consequently, he dedicated himself to instructing the public about the real rules of the game as he played out by the large investments, or what he deemed smart money. Also, first instance publicly of relating trading to a game, such as playing the market. In the 1930s, he founded a school which would later become the Stock Market Institute. The school's central offering was a course that integrated concepts that Wyckoff had learned in identifying large operators. This was the rise of the accumulation and distribution strategies of stock marketing, with how to take positions in harmony with big players or institutional players. This is one of the reasons why TWR created the TWR University, teaching retail investors how to trade and win against the big boys. The Wyckoff method involves a 5-step approach to stock selection and trade entry, which can be summarized as follows. Determine the present position and profitable future trend. Select stocks in harmony with the trend. Select stocks with a cause that equals or exceeds objectives. Determine stocking readiness to move, and time commitment with the market fluctuations. Step 1. Determine present position and profitable future trends. Is the market consolidating or trending? Does your analysis of market structure include supply and demand that indicate the direction that is likely to happen in the future? Note, this assessment should help you decide whether to be in the market at all. If so, whether to take long or short positions. You'll want to use both bar charts and point and figure charts in the major market indices for step 1. Here's an example of a P&F chart. Here's a bar chart, and this is probably the type of chart that most traders are used to looking at, especially when they're starting out. It's a normal candlestick chart that are giving you the bars of the candlesticks. Step 2. Select stocks in harmony with the trend. In an uptrend, you want to select stocks that are stronger than the market. For an example, look for stocks that demonstrate greater percentage increases than the market during rallies and smaller decreases during reactions or volatility. In the downtrend, do the reverse. You want to choose stocks that are weaker than the market. Note, important, if you're not sure about a specific issue, then drop it and move on to the next one. That one's easier said than done, right? Again, you want to use bar charts of individual stocks to compare with those of the most relevant market index for step 2. Step 3, select stocks with a cause that equals or exceeds your minimum objective. Note that a critical component of Wyckoff's trade selection and management was the unique method of identifying price targets utilizing the point and figure projections. These were for both long and short trades. This brings to light his fundamental law of cause and effect. The horizontal PNF count within a trading range gives us the cause, while the subsequent price movement represents the effect. Therefore, if you're planning to take long positions, you have to choose stocks that are under accumulation or reaccumulation and have built the sufficient cause to satisfy your objective. Step 3 relies pretty much solely on the use of the point and figure charts of individual stocks. Step 4, determine the stock's readiness to move. This step requires you to utilize the 9 tests for buying or for selling, and we will cover those later. Step 4, for instance, in a trading range after a prolonged rally, is there evidence from the 9 selling tests that suggests significant supply is entering the market, in which case a short position may be warranted. Or in an apparent accumulation trading range, do the 9 buying tests indicate that supply has been successfully absorbed, as evidenced further by low volume, spring, and even lower volume tests of that spring. You will utilize both bar charts and point and figure charts when utilizing step 4. Step 5, time your commitment with a turn in the stock market index. 3/4 or more of individual issues move in harmony with the general market. So you improve the odds of successful trading by having the power of the overall market behind you. Specific Wyckoff principles help you anticipate potential market turns, including a change of character of price action, as well as manifestations of Wyckoff's 3 laws, which we'll cover soon. This is when you ride the wave. You put your stop loss in place and then you trail it as appropriately until you close out of the entire position, hopefully profit all green. Again, we're using the bar and point and figure charts for step 5. So let's talk about the 9 buying and selling tests that we talked about in step 4. The 9 buying and selling tests are sets of specific principles to assist in trade entry. These tests help delineate when a trading range is drawing to a close or a new uptrend or downtrend is about to begin. The 9 tests define the line of least resistance in the market. Below is a listing of the 9 buying tests and selling tests, as well as references to what kind of charts should be utilized. Number 1, downside price objective accomplished, and the best chart is the PNF chart. Number 2, preliminary support, selling climax, secondary test, and the bar and PNF charts are utilized. 3, the activity bullish, the volume increases on rallies and diminishes during reactions, bar chart is utilized. 4, downward stride broken, that is the supply line or the downtrend line penetrated, both bar and PNF charts utilized. Higher highs, the bar and PNF chart are utilized. Higher highs, bar and PNF chart. The stock stronger than the market, that is the stock more responsive and rallies and more resistance to reaction than the market index, bar chart. Basis forming, horizontal price line, bar and PNF chart. And number 9, the estimated upside profit potential is at least 3 times the amount as long as the initial stop loss was hit. The PNF chart and the bar charts are utilized. Wyckoff selling test for distribution. The upside objective has been completed. PNF chart. 2, activity bearish. Volume decreases in rallies and increases on reactions. Bar and PNF chart. 3, preliminary supply. Buying climax. Bar and PNF chart. 4, stock weaker than the market. That is more responsive than the market on reactions and sluggish on rallies. Bar chart. 5, upward stride broken, that is the support line and the uptrend line penetrated, bar and PNF chart. 6, lower highs, going to utilize both charts. Lower lows, both charts are utilized again. crowning forming. This is lateral movement, and you're going to utilize the PNF chart. And 9, the estimated downside potential is at least 3 times after the initial break of the stop loss. And something to note, utilizing Wyckoff, we're assuming buying equals accumulation and selling equals distribution. Now let's talk about the laws. 3 Wyckoff laws. Number 1, the law of supply and demand determines price direction. Number 2, the law of cause and effect. And number 3, the law of effort. The law of supply and demand determines the price direction. Note that this principle is central to Wyckoff's method of trading and investing. Note that this principle is central to the Wyckoff method of trading and investing. When demand is greater than the supply, the price rises. When supply is greater than the demand, the price falls. The trader and analysts study the balance between supply and demand by comparing the price and volume bars over time. Important note that this law is deceptively simple, but learning to accurately evaluate supply and demand on bar chart, as well as understanding the implications of supply and demand, takes practice. Second law of cause and effect. This helps the trader and investor set price objectives by gauging the potential extent of a trend emerging from a trading range. Wyckoff's cause can be measured by horizontal point count in a point and figure chart, while the effect is the distance price moves corresponding to the point count. The law's operation can be seen as the force of accumulation or distribution within a trading range, as well as how this force works itself out in a subsequent trend or movement up or down. Final law, the third law, the law of effort. Effort versus results provides an early warning of possible change in the trend in the near future. Divergences between volume and price often signal a change in the direction of a price trend. For example, when there are several high volume or large effort but narrow range price bars after a rally with the prices falling to make a new high, this would suggest that big interests or institutional trading are unloading shares, and this could be because in anticipation of a change in the trend. We're going to wrap up part 1. Part 2 we'll cover next week. Next week we'll cover composite man, price cycle, and trading ranges. With that said, that's the video, guys. I want to invite you to come get some with the bulls and come join the team and trade with me. You get all the alerts, all live trading, all the algos, everything we offer. Quit wasting that money that's not making money and come and get some. Guys, as always, if you're ready, follow me and let's go to war.